Let's bring in Dana Peterson, chief economist at the Conference Board. Dana, thanks for joining us. Good to see you. Is this jump all related to reopening, and does that give us confidence that it can continue or make you feel that it's temporary?
Well, even the BLS report said that the jump that we saw, roughly 355,000 jobs in the leisure and hospitality sector, was related to reopenings around the country. So this definitely does bode well for labor market healing as more reopenings happen. But of course, that's going to be very dependent upon widespread availability of vaccines.
Excuse me. To what extent do you think the Fed is going to get to its unemployment targets quicker than it expects? I mean, 6% is fairly impressive for this stage in a recovery.
Well, the thing is that the Fed's employment mandate is quite broad and inclusive. So that means it's going to be looking at a variety of economic indicators having to do with the labor market. So, for example, yes, the overall unemployment rate has been falling, but other measures of employment have been kind of weak. Certainly, we saw the unemployment rate for Black persons jump up. Labor force participation for both men and women has been falling, and indeed for women it fell again. And we still have 9.5 million persons who are still not working compared to a year ago, with 53% of those persons being women. So the Fed's going to be looking at all of these things.
Clearly, you're also making the case now for stimulus, or the fact that there's still a very deep hole for the unemployed, and that's what the administration's been pointing to, Dana. But do we need $2 trillion of stimulus at this point when the data, and it's not just jobs today, manufacturing, retail sales, all points to steady improvement? Well, I mean, we're not, I did make a case for or against stimulus.
What I did say is that once things reopen, once mobility restrictions are lifted, travel bans are lifted, and people can get back to work, and also that being very much tied to vaccines, that we will see an opening up of the economy. In the meanwhile, certainly you still have a lot of folks, especially when we look at the K-shaped recovery, folks in the bottom half of that K-shape, who are still suffering, and they might actually benefit from additional fiscal supports. But again, the key thing is, what are these fiscal supports? Are they going to be towards sustainable growth, or will they just kind of be temporary and transitory in terms of creating a pop in growth that doesn't persist?
Would you have liked to have seen, Dana, more focus on unemployment benefits, whether that's over time or immediately, as opposed to broad stimulus checks?
Well, again, I think that, there are a variety of measures that are important here. Certainly measures that can help people get back to work would be important. So anything that's going towards vaccinations and testing, anything that's supporting businesses such as the PPP, and certainly for folks who are still struggling, a cash injection may not be a bad idea for those folks. And also people who are, still unemployed can also benefit from unemployment benefits. But again, the key issue is reopening the economy, and really the fiscal supports are just a stopgap. They're not really meant to supercharge growth.
So how does this set us up for the rest of the year, Dana? Where are we going to be when we talk to you in December, if we continue to see the reopening and we do see more stimulus come down? Where does that leave us?
Well, that means that we're probably going to have much higher growth rates for this year than what people were anticipating before. There were strong indications that there was going to be a third round of fiscal supports. We'll also potentially see unemployment fall, maybe even fall below 5% by the end of this year, into the upper fours. But again, the Fed's going to be looking at all of these factors, what's driving growth, whether or not inflation is picking up, and how quickly it's picking up and how far it goes above their target. All these factors are going to be important. So I would say, the message is, yes, we will see faster growth. We're expecting a boom in growth, certainly starting the mid-year when things really open up, and also better labor market indications. But all of that will have to factor into what the Fed's looking at in terms of easing, or no longer easing as much as it has been.
Dana, thanks so much for joining us. Good to see you.
Thank you.
Shepard Smith here. Thanks for watching CNBC on YouTube.